What's going on YouTube? In this video, I'm going to be discussing how you can predict and expect low probability trading days, low probability trading conditions, especially as an ICT trader, so you can improve your win rate, improve your profitability, and just save yourself a bunch of unnecessary losses and headaches. There's obviously a lot of people these days that trade ICT concepts, and I think that a lot of the times people lose conviction in the concepts themselves, the models themselves, because they end up getting really good price action one day, and then the next day they're having just terrible, choppy price action that they shouldn't even be trading in, and then they see a fair value gap, be created, get inversed, get reclaimed, get inversed again, and then they're sitting there like wondering what the hell is going on, when in reality, they're just trading in a very low probability condition. The reality is, when it comes to trading any given week, you're only going to get maybe 2 to 3 really good days throughout the course of most weeks. There's always going to be a couple of days every single week where you just really probably shouldn't be trading. The conditions probably aren't going to be super high probability. We're not going to be expanding, every single day of every single week. And there's just going to be days where we're just choppy and consolidating. And those are the days that you want to do your best to either avoid, be really low risk, or even just be trading on demo or combines. But you definitely don't want to be trading your funded accounts. You don't want to be pushing it really hard, trying to, get a really big payout, not be trying to, double your live funded account or whatever the case might be. Being profitable as a trader is already hard enough, even during good condition trading days. There's no reason to make it any harder on yourself. As traders, we've all heard the saying that less is more. And to me, all that really means is just knowing when to be risk on, when to be risk off. And before we dive into these things that you can keep an eye out for, I just want to welcome you to the channel. If you're new here, I do stream most days throughout the course of any given week. The only days that I usually will take off are the days that I will be going over with you right now. So if you want to watch me live stream and you want to see more content like this, hit the like button, hit the subscribe button, all that fun stuff. Once we get to 10,000 subs, we're going to do a Topstep combine giveaway, guys. So as soon as that is done, we'll get that knocked out. 3 accounts being given away as a thank you from me to you for helping me get to 10,000 subscribers. And without further ado, boys and girls, let's hop into the video. So the first day that you're going to want to look out for, boys and girls, no surprise here, no news Mondays. So these are kind of self-explanatory. This is not really a big surprise to many of you that have been following me for a while. No news Mondays are just notorious for really bad, choppy, slow price action. As traders, we like when volatility is present in the market. And the reality is, news is what drives a lot of the volume inside of the market on any given week. So generally speaking, when you have a no news Monday and then you have more red folder news to follow throughout the course of the week, whether that be a CPI, an FOMC, an NFP, unemployment claims, GDP numbers, all of these things are big news drivers in the market that are going to bring a lot of volatility and big expansion days. So when there's no news leading up to those events, those are the days that you can expect price to just be really slow, consolidative, because we're waiting for the news release, the numbers to come out for all of these different news events that are going to be big market drivers. So you can anticipate that while we're leading up to that, that price is just going to be a little bit more range bound and not really going anywhere with any sort of enthusiasm or displacement, which as ICT traders is a little bit more difficult for us to be consistently profitable and just have our PD arrays that we're looking for, our entry models that we're, trading off of to actually be high probability and to be trustworthy. So I would recommend, if you see a no news Monday on the calendar, these are generally days that I'm personally taking off of streaming for that reason. I'm not expecting high probability trades. Again, if you are going to trade these days because you just can't help yourself, I would recommend lowering your size greatly or just sticking to demo or combine. But the other alternative is obviously just taking the day off altogether, sleep in, give yourself a 3-day weekend, and get back on charts afterward. Low probability day number 2, we've got day before NFP, day before CPI, FOMC, anything before a really big high impact news drivers. The biggest news drivers of every single month are going to be NFP, going to be CPI, obviously, and then obviously FOMC as well. These are kind of the 3 pillars of every single month that you're going to expect the biggest anticipation around the numbers being released. So what you can anticipate leading up to these events, kind of similar to what I was saying about the no news Mondays, the market is anticipating the release of these numbers and these events. So leading right up to it, the day before, literally, you can expect pretty slow, choppy price action once again, because we're waiting for those numbers to be released. And people that are trying to force the market prior to these events generally just end up getting chopped back and forth. If I lower my head right here, you guys can actually see I'm recording this video the day before NFP Friday for October 2024, and you can just literally see this is a 5-minute chart, but just chopping back and forth here, and it's been like this pretty much all day. And yes, I'm not saying that there's no moves that you can have, that you could find a trade any given day because the market is always moving. But again, you're not going to get the cleanest price action. And I'm talking to you mostly as ICT traders because most of you guys that follow me are ICT traders. So taking off the day before these events, and like when you have like an FOMC that is an afternoon event, I would also recommend taking off the morning of the FOMC statement because that's going to come out in the afternoon or in the PM session, and then you can look to trade after that event when the volatility is actually present. Low probability trading day number 3 is trading on Fridays after the weekly objective has been met. Now, I want to be really clear here. I'm not trying to give you guys the impression that you need to have like some crystal ball, like you're going to know, oh, was that the objective that the weekly candle was after? Yes or no. But what you can do and start paying attention to when you get to Friday every single week and you look at the weekly candle, did we expand on the weekly candle to a higher time frame point of interest, right? If we did, right, such as taking out a swing high, a swing low, we trade into an opposing fair value gap, something like that, a point of interest that has been taken out by the current weekly candle that you are looking at. If that has been accomplished with expansion days prior to that Friday, meaning if you expanded Tuesday, Wednesday, Thursday, and then also took out a weekly level, a weekly point of interest, you can almost just anticipate and expect that price is likely going to be a small body daily candle for that Friday, and price is just going to be rangy and choppy because one, the objective for the week has already been met, and we've already expanded the previous few days, so you can expect that after expansion comes accumulation, and you don't want to be a part of the accumulation because you're likely just going to get chopped up. The setups that normally would give you really great, big, clean moves are just not going to yield you the same reward that you would have gotten the previous few days. So again, this can be another situation where you take that Friday off, give yourself that little bit longer of a weekend, or again, just lower your size, trade demo, trade combine only. So at least you're not ruining your weekend by losing the profits that you made from the week going into the weekend. Low probability day numero cuatro, we have large expansion overnight. And this is not something that is talked about nearly enough in my opinion. And this is something that is not what you're going to be able to anticipate all the time prior to. So sometimes when I start a live stream and we happen to have had a really large expansion overnight, like between Asia and London, all we did was just expand aggressively in one direction, taking out usually a point of interest, an objective on like a daily or a weekly chart. This does happen sometimes. It's not, super frequent or anything like that. But when it does happen, again, you have the market that's always moving in two phases, either expansion or accumulation. It's never expansion right back into expansion. It's never accumulation into like another accumulation phase. It's just one accumulation phase, then into expansion. It's kind of like a sprinter where when you sprint a race, the runner cannot just run endlessly at full speed forever. The runner has to take breaks, catch their breath so they can sprint again. The market is no different. When the market expands, the market has to, metaphorically speaking here, catch its breath before it can expand again. So when you get on the charts in the morning for New York session and you notice that Asia in London had a really aggressive expansion overnight, you can almost guarantee and expect that price will likely be consolidating and accumulating all New York AM session. So if you're ever on my live streams and we notice that, a lot of times we'll still, tape read the session and filter out a lot of unnecessary losses, or we'll do our best to do that. But you'll hear me say stuff like that the moment the stream starts and I've noticed that we've had a large overnight expansion, I pretty much throw all my expectations out the window and I just assume that I'm probably not going to be taking a trade. And if I do take a trade, it's either combine only or just really low size. But either way, it saves me the frustration of like wondering why the market all of a sudden just stopped moving so clean after a really nice move. It's so easy to look back at big expansions and feel a little bit of FOMO because you missed out on trading to a lot of times an objective that you were waiting to catch, right? You wanted to catch that trade into that high, into that low, into that liquidity level. And it can be frustrating when you miss out on it, especially if you were waiting on it all week long, but it happens sometimes and you just got to flush it, put it behind you and wait for the next high probability condition to look for setups. And last but not least here, boys, number 5 is when you notice that the indices are just out of sync. So this can also happen. It's something that you have to recognize and identify. Again, in the moment, there's not really a way for you to know when this is going to happen. It's just something that you notice while you're watching data print, while watching candles print. So for example, if you like trading the NASDAQ or the indices like myself, and you watch the NASDAQ and you watch ES, maybe you watch a little bit of Dow Jones, but you notice that NASDAQ is working higher. Meanwhile, ES and or Dow Jones is working in the opposite direction. Those are correlating assets. So generally speaking, they should be doing the same thing at the same time. They should be moving in the same direction along with one another. If they're not doing that, that is a great indication that you are trading in low probability conditions. And again, you just got to temper your expectations. Either take off, don't put any trades on, or trade really low size, trade combine, trade demo only. But if you notice this, it's not worth trying to push it. It's not worth trying to, full port your account that day. That's not the smartest thing that you can do. Not that any of you should ever be full porting any of your accounts at any point in time, but knowing the naughty, degenerate boys and girls that some of you are, if you're going to do it, you might as well at least do it when conditions are probable. Just a little gambling 101 gem for you degenerates. So boys and girls, looking at this list, you have 2 days where you can anticipate ahead of time a lower probability condition. So you can look at Forex Factory or wherever you look at to get your news data, and you can see when you have a no news Monday. For example, the week of me recording this video, you guys can see that Monday, October 7th, we have a no news Monday. But guess what else? We also have a no news Tuesday. Now, am I going to expect Tuesday to be any bit better than the Monday prior? Likely not. It might be a little bit better, but the odds are it's going to be just as low probability, most likely, as Monday was. So if I'm looking ahead to these 2 days, I'm just not going to have a high expectation. I'm not saying that you can't trade these days. What I am saying is if you're going to trade these days, just have the right expectation, right? Don't expect there to be like these really big ranges, really clean moves that you would normally get on maybe another day. And another thing you'll notice just by looking at the economic calendar, you can see that this week coming up, we also have a CPI event. So this is exactly what I'm talking about. When you look at the beginning part of the week, you already know what to expect. You know that market is waiting and anticipating the CPI numbers to come out. So you can just expect price to be a little bit more slow and not as in big of a hurry to get to a weekly or daily objective until these numbers start to come out and the market starts to pick up volume and volatility. So use the economic calendar to your advantage to frame an expectation and to come into the market knowing what to expect every single day. So that way you're not having too high of hopes and then end up doing damage to your account and walking away frustrated and then going to Twitter saying that ICT concepts don't work and that ICT is a scam. And then guys, these last 3 are going to be ones that you will just have to notice while you're doing your technical analysis, looking over charts, looking for trade ideas on any given day. If you notice any number of these 3 things going on, your little spidey senses should be tingling and you should be telling yourself to, again, lower size, step away, or just trade demo, tape read, combine only, things like that, guys. Things to protect you from you. Like I said earlier, trading in high probability conditions can sometimes be challenging enough as it is. So make it easier on yourself. Avoid having high expectations when conditions are just low probability. I promise you, if you do this one simple discipline that you factor into your trading plan will increase your win rate, not because you're just winning more, but because you're losing less. So hopefully this is helpful to any newer ICT traders that might be struggling with trading in low probability conditions, but also hopefully this serves as a good reminder for some of you that have been trading the concepts for a little bit longer than some others. And maybe this is just a reminder that you kind of need to just pound into your head and realize like, hey, listen, sometimes I'm just too stubborn and I try to push it too hard on these days. And that is why you do more damage than you would like to. You blow up accounts that you never should have blown up in the first place. And if you'd have just avoided these situations, you could have saved yourself a lot of time, money, and heartache. Because remember, guys, less is indeed more. And sometimes you just got to slow down in order to speed up. Just because the market is open and moving every day does not mean that you personally need to be trading every single day, pushing it hard and, trading like you're trying to win the lottery. It's funny. A lot of people say that they got into trading because they wanted to set themselves up for generational wealth and to be able to have freedom for the rest of their life. But yet most people come into the market every single day trading as if they're trying to retire by tomorrow. Market opens same time the next day. There's going to be infinite more opportunities. Most of the time, the reality is we're just our own worst enemy, and you got to have guardrails in place to protect you from you and making mistakes that you should avoid. If I missed anything that you think should be honorable mention a part of this list, feel free to mention it in the comments down below. But I appreciate you guys for watching. I'll catch you in the next one. Peace out.